can Rachel Reeves politically come along and say to this Labour government, this parliamentary Labour Party, to the country, that the solution is going to be big cuts in public spending? I don't think she can do that. I don't think she should have support for that. In the last 24 hours, we've had very significant economic news. On the one hand, on Wednesday, the Federal Reserve finally doing what the president has been urging for some months. I mean, his attitude towards the US Federal Reserve, the central bank, and demanding the removal of one of his key voting members, Lisa Cook. He says that he has the right to remove her, seen as a massive challenge to Fed independence. But the Federal Reserve cut interest rates on Wednesday by a quarter point, with growing worries about what's happening in the US labour market. Is the economy slowing down? Is the Trump tariff effect starting to bite? And then today, by contrast, despite lots of speculation that the British economy is going to be slower, the Bank of England chose not to cut interest rates. They were held at 4%. And the reason is because inflation stubbornly high. The news this week that in the latest figure in August, inflation stayed at 3.8%. Compared to Europe, compared to America, the UK has an inflation problem at the moment, and that is stopping these interest rates coming down. But then also wider speculation, are these high interest rates and high long-term interest rates in the bond market also a reflection of fiscal worries in America, Britain, France, across Europe as well? So it's quite an unstable time in the global economy, but at the moment the UK and the US on different paths.
Yes, I mean, I think let's start with acknowledging that lots of people thought that by the time we got to this time of the year, there would have been quite a few cuts in interest rates in the US and in the UK. And in the case of the US, this is the first cut of the year. And in the case of the UK, now, rates are significantly higher than people were predicting a year ago. And as you say, it's the inflation issue. Inflation issue, of course, buried in that 3.8% inflation is a 5% food inflation number. So out there in the real economy, families who are being told by the Labour government, our economic plan is working, are just seeing their food bills go up and, their incomes squeezed. I think don't you have to differentiate between things that are going on that are global and things that are particular to the UK or indeed the US. I mean, things that are global are lots of governments are now running quite high deficits. The German government, I'm here in Bavaria, has made a massive decision in the context of post-war Germany to run a deficit, spend a lot more. There is inflation returning to the Japanese economy after several decades when it hasn't been present. And that kind of underpinning of the bond market of Japanese and German bonds has become somewhat unanchored. You've got the French political situation, which we've discussed on this podcast before. And in the US, as you say, Trump is at least verbally undermining the independence of the Fed. So, I think if you were, the Bank of England governor or indeed the Chancellor of the Exchequer looking for some excuses, you'd say, look, we're part of a pack. There's nothing particularly special about us. And they'd say there are some other particular market factors in the UK, like the declining demand from pension funds with defined benefit schemes for long-dated gilts and so on. That's all true, but as you say, the UK increasingly looking like an outlier on inflation, not cutting rates at the same week that the US is cutting rates. And ever since the mini budget, and indeed that moment, if you remember when Rachel Reeves cried in Parliament, the bond market has been very, very skittish about Britain and very nervous about inflation and very nervous about a kind of collapse of political will around, keeping deficits under control and keeping debt under control. And that is the backdrop, isn't it, for this budget that is coming up. Fundamentally, and we've discussed this before, Rachel Reeves and Keir Starmer cannot break from these fiscal rules. They might fiddle them a little bit around the margins with definitions and things, but they've already done a bit of that. But your point, the pivot you suggested earlier in the year, which is to say we're in a very different world, very dangerous world. We need to rearm. Tariffs have changed the global environment. We're coming off our fiscal rules. That moment has passed. We know they can't really cut spending. We've just been talking about the Labour deputy leadership contest. There's no one advocating for austerity or kind of spending cuts in that contest. So you're left with these questions about tax rises, and the bond market is forcing that choice on the British government, forcing that choice on the Chancellor Exchequer. And the news there is only getting worse because it looks like, I suspect this is a deliberate leak from the Treasury, the OBR is going to downgrade the productivity forecast for the UK. And that has, again, a meaningful impact on how much tax revenue you get, and therefore on the kind of fiscal black hole you have.
So I think you are totally right to say the budget is now a pivotal, seminal moment for Rachel Reeves and for Keir Starmer, for the Labour government and for the British economy. And if they get this wrong in its content and in its politics, then it's kind of very, very difficult indeed. The only thing I would say is I think if you look at so far market events this year, I think they are more about inflation than about fiscal in the UK. I mean, there's not been a big deterioration in the UK's bond market standing. If you look at 10-year interest rates, which is, a good measure of market worry, actually there's been barely a rise in Britain over the course of this year so far. Big rise last year, but not this year. In America, they've actually gone down by half a percentage point. It's been France and Germany where you've had more fiscal worries. The thing which I think has been happening this year in the UK is inflation's not come down. And therefore people are thinking, well, is there an inflation problem? Maybe the Bank of England can't afford to cut interest rates. At the moment, markets think that the final resting place for interest rates in the Eurozone will be 2%. And in America, closer to 3%. In Britain, 3.5%. You have to have higher interest rates because you're going to have to bear down on inflation, even if you sacrifice some growth in the process. Now, that might be because there's a fundamental inflation problem. It might be that last year's budget and the rise in national insurance kind of put a bit of administrative price rises into the system. It might just be that, we are working our way through the post-pandemic path in a slightly different way in Britain or in Europe. I don't look at the numbers and think to myself that what's happening in bond markets, despite some of the hype, is actually about current fiscal worries. But if you get to the budget and the government has to announce a slowdown in growth this year, the OBR, as we now think lightly, saying that longer term growth for the next few years is lower, higher interest rates globally, meaning the debt service interest payments on all of our debt has gone up a lot. And in those circumstances, you've got a big fiscal gap, 20, 30, 40 billion pounds a year. And that if you don't close that gap, and Rachel Reeves has got very little room for manoeuvre, she's got no safety margin, you would have debt rising, not falling. In those circumstances, at that point, you definitely crystallise a fiscal crisis. I say definitely. I think you'd be running a great risk of big fiscal problems. Rachel Reeves cannot afford to have debt rising over the next 5 years rather than falling, and therefore you're going to face some very, very difficult decisions in that budget. Can Rachel Reeves politically come along and say to this Labour government, this parliamentary Labour Party, to the country that the solution is going to be big cuts in public spending? I don't think she can do that. I don't think she'd have support for that. I don't think it's actually what the economy or public services needs. But what she's going to have to do on tax is going to be very painful. I don't know whether you saw the former head of the CBI, Carolyn Fairbairn, saying that what the government now needs to do is accept that the manifesto commitments on VAT, national insurance and income tax, they're out of date because of this growth and fiscal challenge. The worry from the CBI or that business world is, if not, it's going to be business and capital taxes which bear the burden. I thought it was a very interesting contribution for her to make. But this, if it may be an inflation challenge so far this year, but it becomes a big fiscal challenge if Rachel Reeves doesn't do what is going to be, her second eye-wateringly challenging budget in 12 months, and where the politics is much, much more delicate and difficult for her and Keir Starmer.
Well, maybe the bond market hasn't balked at the kind of fiscal moments because the government have stuck to their fiscal rules.
Exactly.
And the only moment when she, sorry to make it personal, but when she cried in the House of Commons and people thought she might resign that day, the bond market did react immediately. And so it's interesting, her challenge. In some degree, she has more flexibility on spending than people realise, because the change in the definition of debt to this new definition of public sector net financial liabilities, which is called per snuffle, the measure amongst the technicians, it means that she can spend money through certain quasi-state entities like the National Wealth Fund, the British Business Bank, Great British Energy. The new nuclear power station at Sizewell is being funded that way, essentially off the balance sheet of the state for the purposes of the fiscal rules. And I think in the budget you'll see a load more of things like that. Second, I think the OBR, the OBR is being attacked now by the left in the same way the Tory right attacked it. The Tory right says tax cuts pay for themselves, why don't the OBR recognise it? And the Labour left says spending a load of money, gets the economy started and pays for itself. And neither are true, in my view, or at least not to the extent that both sides argue. And the OBR has scored dynamic changes. It does score investment as contributing to growth, and it says certain tax rises don't, cost as much on paper as you might imagine. Most notably did when I cut the top rate of tax. But the OBR, I think, will probably think we do have to downgrade productivity, but we're not going to take it all the way down in the way that some independent commentators are, because that would really put the Rachel Reeves in a terrible mess. Because you could justify, reducing Britain's long-term productivity growth forecast by 0.5%, and that would put a £50 billion hole, because each 0.1 is roughly 10 billion in the public finances. I don't think they'll do that, but the ground is being laid in the press for some kind of downgrade. I think there's a final kind of interesting observation I make about politics. If people thought that Keir Starmer was going to go, that Andy Burnham was going to come in, or Bridget Phillipson, or whoever was going to come in, that there would be a very different economic policy, different Chancellor almost certainly, different fiscal rules. I think you might see the bond market again, sort of asserting itself and putting a shot across the bow of British politics or Labour politics. I mean, there's a sort of irony that both Keir Starmer and Rachel Reeves are now the guardians of fiscal discipline as far as the market is concerned. And if they look like they're falling, which at the moment, the speculation's there politically, but it's not there in the financial markets, things could be very different. And then you find yourself, which I think, if you look at the history of the Labour Party and Labour governments, quite often Labour leaderships have sort of found themselves trying to defend, fiscal prudence against their own party and their own movement, famously and, very divisively in the 1930s, but also in the 1970s. And anyway, there's this kind of, you just don't, there's a kind of bond market element to the Starmer leadership speculation.
That is true. And I think one of the potential candidates we didn't talk about earlier, Lou Haig, who was sacked by Keir Starmer from the government a year ago, her contribution before saying she wasn't going to stand in the deputy leadership election and she'd be standing from the left was to say we need to change the fiscal rules. I don't think anybody would win a Labour leadership contest from the position of loosening the fiscal grip. But I don't think anybody's going to win the Labour leadership election from the point of view of big further cuts in public spending. And so it is going to be a tax where the pain is going to come. And that is what the government's going to have to face up to. And that would be true whoever is the Chancellor and whoever is the leader. And if you look like you're ducking that, or you can't get your decisions through, and of course in France for the last couple of weeks, the government has been failing to get big decisions through, as Keir Starmer failed on welfare reform. Those things are where the real destabilisation comes. There was an interesting piece by Rupert Harrison to link my point about inflation and fiscal, in which he was saying, if you're going to move on tax, which I think everybody's expecting in the budget, don't do so through the kind of tax rise which pushes up inflationary pressures. VAT is the most obvious one there. Arguably, Employers' National Insurance did a little bit of that last autumn as well. I guess my question is, for the government at the moment, is what's the narrative? I mean, what is the explanation that they are giving to the public, to the country, to MPs about difficult decisions happening at the end of November? There was a narrative at election time, which they didn't choose to take, about the inheritance. There was a narrative post-election which was about the in-year inheritance last year, but we're not in the first year of the government anymore. There was a possible narrative, as you referred to earlier, around Donald Trump and the global economy and tariffs and growth and defence pressures. They chose not to take that narrative then. I'm not sure now that they're going to find it easy to pin an OBR productivity downgrade on the last government, because that isn't an argument which has been made in a kind of intellectually compelling way sufficiently in the last 18 months. And so the story of this budget at the moment, I'm not sure what story they're going to tell.
Well, the story is going to be, because Keir Starmer doesn't have a control over his party, he couldn't get the cuts to welfare and winter fuel through that he wanted. And as a result, taxes are going to go up to fund the whole. Even if actually the productivity downgrade will be a larger component of the whole. I think the real, by the way.
Are you saying that's a story which the Marxists are going to tell, or that you're going to tell, or that the Treasury's going to tell?
No, I think it's the story that the government is, through the absence of other stories, telling. That's what people see the budget now in the context of.
But that's not a good story for Rachel Reeves to tell about her budget.
No, totally agree. No, totally agree. And basically the judgment at the beginning of the Parliament, which was, we don't need to create a lot of headroom, we don't need to build up a war chest, which is what other chancellors such as myself and Gordon Brown did, turns out to have been a big mistake, because it exposes you to quite small changes in things like productivity growth forecasts and what the hell's going on in the global economy. And then it blows your fiscal rules off course. And the fiscal rules are now anchoring the credibility of the Labour leadership and anchoring the credibility of the government in the bond market. And so, but I mean, I'm quite sympathetic to Carolyn Fairbairn's argument, which is, if you're going to do it, if you're going to have to raise taxes, bite the bullet on your promises and do something substantial rather than a load of smaller things like on business and enterprise and capital taxes, which are simply just going to make the country less economically productive and add to your problems. I mean, you can do a bit of, continuing Rishi Sunak's freezes of income tax rates, reversing some of the very recent Tory changes on pension taxation. There are definitely sort of sums of money you can find that way, but I don't think they're going to be enough. And if they're not enough, maybe the time has come. If you're going to break one of the manifesto promises, you can't deliver the spending cuts, which I think is what a Tory government would be doing, then it's probably now, because of the bond market, the tax promise you need to break rather than the fiscal rule promise you need to break, the borrowing rule you need to break.
Well, the budget's not happening until the end of November. So, there's going to be 2 more months, more than, of this speculation. And, in the absence of a really clear story and narrative, that's a long time for other people to fill that vacuum with narratives of their own. So I would say, for the conference, it's imperative for Keir Starmer and Rachel Reeves to be preparing the ground for the budget in the way that, at the moment, they haven't really begun to do. We're going to be talking about this a lot in the coming weeks.